You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 14th day of March, 2019. Tomorrow, the Ides of March. Thanks for joining us. Whoever you are, wherever you are, we're so glad to have you with us. If you're returning, welcome back. If you're here for the very first time, a special welcome to you. Again, we're glad to have you with us. I have a chart up of the S&P 500 Emini Futures. If you cannot see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in 30 seconds. If you find yourself away from the office, working off a cell phone, and you want to join the show, go to youtube.com/CFRN/live during the live broadcast, and there you'll find our live simulcast. Thanks to the good folks at YouTube for carrying the show. Now, let me just say that we had a great show yesterday. Garrett joined us along with John. If you happen to if you missed the show yesterday, by golly, you can go to youtube.com/CFRN. No live on the end of that, just youtube.com/CFRN. And you can enjoy yesterday's show after today's show. Today is Thursday, and on Thursdays, Dr. Tom joins us. We'll be talking about gold, investment grade gold. We'll be talking about why when stocks rally, gold tends to fall, and vice versa. We've seen it happen for a very long time, and we'll talk about some of the reasons why. John will be joining us about 20 after in about 10 minutes. So let me give you the numbers here real quick, and then we'll go to Michael and get a recap of what happened in the live training room today. Currently, cash market starting here in the US. The Dow is up 37 points. NASDAQ is up 9. S&P 500 up 3. And the Russell 2000 down 3. By the way, tomorrow is quadruple witching day. Crude oil up 41 cents, trading 58.67 last. Gold taking a beating today, down $14, trading $12.95.30 last. In the Asian markets, the Nikkei down 3 points at the close. Shanghai down 36, which is a little over 1% for the Shanghai. And the Hang Seng added 43 points on the session. In European markets at the close, the FTSE up 28, DAX up 14, and the CAC up 43. It was a mixed day in Asia, a green day in Europe, and here at home, it's a mixed day thanks to the Russell. If it turns around, we'll have a green day here in the US of A. With that, let's go to Michael and get a recap of everything that happened in the live training room today. Michael, are you ready?
I am ready. Let me first grab the screens. Okay, there are screens, and there's our home page. All right, I'm ready to go.
Okie doke. It is all yours.
Excellent. Okay, good afternoon, everyone. Today is Thursday, the 14th day of March, 2019. If you have not taken a free trial with us, and you want to take a free trial with us, then go to the home page at CFRN.net. And over in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you go to apply.cfrn.net, you will be at this page right here. You see that up there? https://apply.cfrn.net. All we ask for is your email, your first name, how you found us. Click on that submit button. Once you hit submit button, you will be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you must click on the confirmation link. Okay? Okay. Spreadsheet. Everybody wants to see the spreadsheet. Okay, here we go. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. As I said, today is the 14th day of March, 2019. And today we made 11 ticks on crude. We lost 3 on gold, and we lost 4 on the ES. That put us at plus $30. We did get the gold for the day, but then we gave it back, and then we got some of it back afterward. Today it took 33 minutes and 2 trades to get to the goal. At that point, we were up $100 a contract, and we took a total of 8 trades. So on the month now, we're at 851. It's over 9 days, 9 business days. On the year, we're at 4,950. That's over 45 business days. Okay. It's this week, this rollover week has just been horrible trading. It's just been a mess. But we'll go through everything we did and didn't do. Anyway, pre-market trading, when there was some opportunity in here in gold in the pre-market, and then it opened up and we picked up on gold. We picked up 5 ticks right here. Okay, we picked up 5 ticks there, and then we gave back 8 right here. That's what put us at -3. Then gold was just a mess. There was nothing you could do in here. Even now, there's still nothing. Okay. The euro. What did we do on the euro? We had just this one trade right here. We ended up with a break even on the euro. Then it went up after we got out break even. It went up. There was one that we missed right here that went about 4 ticks, and then it was just chopped the rest of the morning session. Really nothing you can do even during the break. It was a mess. A possible momentum trade here that would have been a break even. It's changed directions now, it looks like, but not really. This rollover week has just been horrible. And now we're on the H contract for the euro, but tomorrow I think we're going to be forced to go to the M contract tomorrow. Okay, we're still on the H contract because that's where the volume is, though it doesn't seem like it. It is. But I think we're going to be forced to go to the M contract tomorrow. Okay. Now on crude, let's see here, on crude oil. Well, let's see, in the pre-market there was some good movement on crude. But I missed this one and I missed that one. So I missed 2 trades on crude that could possibly have gotten us to the goal for the day. Then I picked up 8 ticks right here. We had a break even there, and I think I picked up 2 ticks right there. Yeah, 8. We had this was +1, and this was +2. That was our day on crude. Now during the break, we had a bounce off the BBC right here, where the MA1 stayed blue, the cycle stayed blue. We had good separation. It took it a while, but it eventually went up and gave a nice move. Yeah, that's pretty much it on that front. Okay, on the ES, we had picked up 4 ticks right there. I'm sorry, $50, 4 ticks right there. It started out, I mean, just look at the chop, really choppy. Then it started to move a little bit. Then down here we went short on the down close below the trend line. The cycle was going up a little bit steep, but not too steep. Anyway, it went right back into the zone and stopped us out. There was another one right here that would have been a break even had I done anything with it. But I didn't. There was another one right here that I was explaining I thought was gonna, the ES was gonna drop. And it did drop. It dropped enough to stop you out if you would have gotten into it. But then it changed directions during the break, not giving any trade setups. It just changed directions during the break. Okay. And that was it. That was our morning today. Wonderful morning it was. So yeah, this week has just been horrible. Today is Thursday, so we're plus 100 on Monday, minus 250 on Tuesday, plus 10 yesterday, plus 30 today. But you won't find a week like that in years. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 11 ticks in crude. We lost 3 in gold, and we lost 4 on the ES. That put us at plus 30 on the morning. Now we did, however, get our goal for the day. After 33 minutes and 2 trades, we're up $100 a contract, and we took a total of 8 trades. We were actually, our max on the day, I think we're up $180 a contract. But we took a total of 8 trades. So on the month now, we're at 851 and a quarter. And on the year, 4,950. Now that's over 45 days, averaging $110 per day. 110 per day. Okay. Okay. Yeah, if you have not taken a free trial with us and you want to take the free trial with us, go to the home page here at CFRN.net. In the right-hand column, it says 5-day free trial. Apply to CFRN.net. Click on that, and you will be brought eventually to this page, where all we ask for is your email, your first name, and how you found us. Click on the submit button. Now once you click that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay? And that is that. With that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. And can somebody type something into the question box? Just anything. So, because Bert's having a meeting this afternoon at 2 p.m. Eastern, Bert's going to have a meeting. Thanks, Ken. And Valerie, I don't know if you copied his link. I didn't copy it. that you usually do. But if you can just post Bert's link in there, 2 p.m. Eastern, Bert will be doing the meeting.
I'll get it.
Thanks. Okay. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Okay.
Alrighty, we'll do that. Here we go. Okay, recap of the recap. Michael?
Hang on to it. Sorry. Okay. The recap of the recap for today. I dropped my headset. The recap of the recap for today. It took 33 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 per contract.
Well, that's a good bingo. All right. And in answer to your question, Wayne, yes, tomorrow is quadruple witching.
Yes, quadruple.
Options expiration.
John is not out there yet.
Okay, he should be showing up here momentarily. Okay. All right. So I left some of last week's zones up because I just wanted to show you guys. I always tell you that the zones have the carryover effect, and that jotting them down at the end of the week can often be a good thing because in the next week they may be beneficial. And that was certainly true this week. Here's a zone 91.92 to 99.2800. We ran up, pulled back to the zone, up to the zone, down to the zone, up to the zone, down to the zone, and then back up to the zone where we consolidated before moving up to this week's highest weekly trading zone. Now the distance here was 7 points up, 7 points back down, 7 up, 7 down, 7 up, 7 down, and then 7 back up. And that was inside of this week's weekly trading zone, which we just blew right through and never pulled back to it. That in and of itself is pretty unusual. If you blow it up and take a little closer look, you can see we closed above it, and then on the next 30-minute candle we did actually pull back. It's usually a little more graphic, a little more dramatic than that, but it did reach back and touch on the next candle and then continued its move up. And we got above the highest weekly trading zone yesterday at 10:30 a.m. Eastern, the 10:30 30-minute candle. We ran up to one of last week's zones at 26.27, back down, and attempted to move back up, back down, back up, back down, and here we sit. We thought we might see some serious movement during that 30-minute period between the live training room and this broadcast, but and we did. We got a little move up. We ran up to 28.2075 on the S&P, putting in what looks like a lower high here. Will this thing turn down? There's John. Let me get his mic open. Hey John, welcome to the show.
Hi there. Didn't mean to interrupt you.
No, go right ahead. No,
okay.
Good to hear from you.
Thanks, likewise. Thanks for the invite. Yeah, you know, look, this market just doesn't want to go down at the moment. They had a dip yesterday afternoon, which we kind of got a sense that was going to be a bit of a pullback. And then that Boeing thing happened, and that shook the market down, but not by much. And then, if you remember what we said yesterday, that I thought the Dow would recover and maybe pull ahead in the leadership, if you like. Mm-hmm. And right. That's what happened yesterday. The Boeing, when Boeing, you know, went down initially, it turned out to be a good buying opportunity. You know, like it went down about $10 more to the low, below the previous low, and then it came roaring back up. And the reason that happened, that probably as a puzzle to a lot of people, because, you know, grounding their two latest planes is not what you really want to see. However, in a way, it de-risked Boeing for the time being, and so it's by putting the planes on the ground. You know, because if any of those planes, if another plane crashed in the next week or two, you know, or sometime in the future, that would be devastating to the company. So you know, and these bottoms, you know, you never know when they're going to, be the real bottom, because look, you know, if they give it all clear next week or something, or in the early days of next week, you know, Boeing could recover very quickly. I think getting the all clear would be a huge, certainly, I'm not saying back to the highs, but it could certainly get it up a 5%, you know, back to where it was down 5% rather than being down 10% or so. And you know, the fact is, Boeing closed positive yesterday after that happened. So,
that was the first time in, I think, 9 sessions or 8.
Maybe, yeah. So but the market is still. Look, there's this vote this afternoon that's coming up. You know, it's
Brexit.
Probably foregone. Yeah, no, the other one, the wall, the border wall. That's probably already a foregone conclusion, but you never know. There might be some surprise at the end. Surprise positive vote. If that's the case, the market will probably rally further. And, you know, look, as long as it doesn't come undone here too much today, I think we're probably going to be okay. And if we rally into the end of the week like we did last week, it probably sets us up for further upside next week. And as we were looking at the 87 March, contract yesterday, or the March month, if you like.
Right. Yesterday,
it did kind of rally right into the end of the month, and I think you know, there's nothing out there at the moment that could knock the market down that we know of, but you know, something could come out of the left field. So and look, Facebook is down today. There's apparently some problem with Facebook. There were some reports about they were being investigated for this data stuff, and secondly, they had a failing, some sort of a failure worldwide, and I think Instagram was down for a while.
I think they were down most of the day yesterday, weren't they?
Yeah, let's have a look at it.
Well, when I say down, what I meant was I think Facebook was offline yesterday for an extended period of time.
Yeah. Look, it's only come off a little bit today on the chart. It's down a few bucks. It's not that big of a deal. But
gap lower open this morning, but it's turned positive.
Yeah, and it probably, you know, if it gets back above that, it could actually break out to the upside. So I think the Fed meetings next week could be a market mover as well. And you know, we might even rally into the end of March for potentially better employment. I mean, look, if we, whether they upwardly revise February or not, which is possible, you know, if March comes in at 100,000 new jobs, I think the market's gonna, you know, respond, you know, react very reasonably well to that. If it's back up to 200,000, I think the market could go up a lot. So, you know, that might be a kind of a bit of a run into April if we can get there. But I think after that, you got to be very careful. Just because we had 3 months straight upwards, and we might be in for some volatility in April, May, especially with the tax, around the tax time too. There was something that somebody mentioned about April, May yesterday, that is something I hadn't thought about, that the China deal. You know, that's the other thing. You've got, now that the China deal is sort of getting pushed back, you know, it's still anticipating a deal. So that's another reason why the market's kind of acting as well as it is. And look, as we said yesterday, the structure of the market is such that, you know, if we do go a bit higher here, we're gonna start closing in on previous all-time highs, which is you know,
which
quite
you
an
can see
accomplishment.
right here.
Yeah, and look, if we take out that resistance area, I mean, jeepers, you know, you could really get a 100-point rise in the S&P, maybe at least that much.
Here's a monthly.
So, right. Yeah, it looks pretty good, doesn't it? Yeah.
Well, yeah, it actually does. It's starting to look like we could put in another leg to the upside.
Yeah, there was some other reason why the market could rally big time into the summer now.
So something you've brought up a couple times here in the last few days is the Ides of March tomorrow, and you said that as if it could hold some sway over the markets. Is that from a historical perspective?
We can get through that. Yeah, look, if we can get through that, you know, well, as I said, you know, March the 10th and March the 24th were the tops in 2000. I think in 2007. It wasn't, maybe it was 2008. I think 2008 we had a bit of a rally in the first quarter, and then we turned down, you know, for the rest of the year. So I think that was definitely the case, actually. So, you know, we have to keep that in mind. There's also the Brexit thing going on, which, I mean, I don't understand this Theresa May. You know, she was originally a Remainer, you know, remain in Europe.
Right.
You know, she blurts out yesterday, oh, you know, the third option is I think a delay and a referendum. I mean, and we can't have that. I mean, you know, whether she's being controlled by people or whatever, it doesn't make any sense. I think it's perfectly reasonable to have another referendum, you know, to be absolutely sure. This is a monumental development, you know, it's the future of the country for generations.
So now they're saying that they won't leave without a deal. Is that right?
Yeah, and the, you know, the Europeans are playing hardball to say there's, you know, you already got the best deal. There's nothing better. You know, they're playing hardball. So, but they may, you never know. They might have a meeting of the minds, and I think if they get a new leader, which looks like it's pretty likely now, that could change everything. Because look, if Boris Johnson comes in, obviously you've got an even more zealous Brexiter. You know, you got a guy who's going to get out no matter what, probably. But some of the other fellows you don't know. You know. And look, the majority isn't that big, and they've got a Labour government now. Getting, you know, they don't want to leave the Labourites, and then you've got the Northern Ireland, so they've got, you know, it's not exactly an overwhelming you know, situation anymore. So it's pretty complicated, but just take it. Oh, that's the other thing that happened. You know, the dollar, we talked about how yesterday afternoon during the gold went up great, right? And continued higher, and the dollar got whacked for some reason down to that test of 96, and you know what, it just promptly turned around. It hasn't rallied that much today, actually, against yesterday, but the gold and silver have taken a bit of a hit, and we did say, you know, it looks like they're gonna, it makes sense, because if they go down into Friday, and then the Fed meeting comes into play, you know, next week, that could get the metals going back up again. And I would say if the metals go up after the Fed meeting, then possibly the lows are in, possibly for a long time, maybe forever. So we'll see how it all plays out. But that next meeting with the Fed is, you know, how gold and silver react to it are going to be very critical.
When is the next Fed meeting?
I think it's Tuesday, Wednesday next week.
Is it really?
So, and you know, the numbers, the inflation numbers already came in. They were a little bit up, actually. Up, they were 2.5, I think, on the PPI. around about 2%. So, you know, but you know, it looks. I don't think, obviously, it doesn't look like they're going to raise rates. So the last time gold jumped quite a bit on the news of the Fed, may do it again. And if it, you know, they could. I mean, if gold goes up $20 or $30 off the Fed, you know, immediately following the Fed, I think you can say this is becoming more like a bull market. You know, a real bull market.
So do you think the Fed's dovish language continues when we get the interest rate decision next week? I mean,
the guy, I did catch some of the interview with him last night on the 60 Minutes, and you know, he was pretty dovish then, really, in it, and there's no reason for him right now. I mean, look, with the employment being 20,000, I mean, there's no way in the world they're going to raise rates with that happening. It would be suicidal. And I think, you know, he's got beaten up so I mean, nobody wants him to raise rates. So we'll see. And then I think they could just stay this time and possibly lower rates in May if the fundamentals, you know, say they should.
And tomorrow at 10 a.m. we get the JOLTS job openings.
Is it tomorrow coming up?
That's what my economic calendar says.
Oh, great! Oh, great. That could be interesting.
It is a high
I mean,
impact.
if that hits a new high tomorrow, that would be very bullish for the employment picture.
The forecast is
a couple of things that I wanted
million.
to mention. You know, the TVIX, which is what we are using now as our primary VIX indicator, since the VXX is no longer, and the replacement for the VXX is VXXB. So this VXXB, TVIX, and UVXY are all potential
TVIX. There we go. That's a daily.
Yeah. What you got to look for here, it's starting to look like this TVIX is going to hit a new low here, or challenge the October lows. Any you know, in the next week or two, and you know, somewhere in the 20s probably is going to be a reversal at some point, especially if we think there's going to be some volatility in April and May. The risk of going into the VIXs is certainly going to be a lot less if we get down towards the double bottom or lower lows, because you know, there's a limit to how much these VIXs go down when they, you know, the VIX itself. It's you know, when it gets down to 9 or 10, it usually rallies before too long. So you should keep that in mind. Although you have to be, you know, if the VIX does start making new lows or new all-time lows, you know, look, I mean, you see the history there. So, you know, obviously, it doesn't look like we're going to hit new lows, given the base there before, but and remember when this was happening, the market was soaring, you know, all through that basing period. So but obviously down in that range, where the VIX itself, maybe 11. I mean, it could get to 10, maybe 10, 9. It's been to 10 once before. Maybe, I think it's been 9 further back, possibly. So when it gets down there, it's never been lower. So, you know, unless we get some kind of, unless we start going to 33,000 on the Dow, I guess we're gonna see some sort of a you know, a rebound in the VIX come out, and possibly come out of nowhere. Because I mean, look at the way it happened in October. See that? We had a doji. There was a doji down there on about the 1st or 2nd of the month. See that? And then the next day, gapped higher and never looked back.
Yep.
And that was like a triple, that move, you know, in a pretty short period of time. And then you had another chance in December when it basically was a double, you know, or maybe another triple almost. So
tomorrow's quadruple witching. You want to explain to folks what that is?
Yeah, it's when all the contracts, the futures contracts of most of the March futures contracts are going to go off the board. So we've already switched to the June, and the options and everything all kind of expire. So very often there's a lot of volatility because, look, for people who are really paying attention, I mean, occasionally, once in a blue moon, if there's some, major move happens on triple witching, it can be very opportunistic because the value of the options, the time value of the options goes down to almost zero. And so the option itself, sometimes they're very cheap when they're just out of the money ahead of expiration, excuse me. But if suddenly there's a big move, you can make a ton of money out of those options. And I'll give you an example. John Nigerian, who's become quite famous, he's and the Nigerian brothers. I think they put about 25,000, or no, I don't know what they did, but I worked it out. If there were some options available on October the 16th of 1987, which was a Friday, I think,
right,
was available. If you'd put $25,000 into those options, you would have made $1 million by Monday or Tuesday on that crash. So, in other words, no, sorry, just in that day, I think, just on the Friday, because it was options expiration that day. So the Friday, the market dropped pretty precipitously. So on the Friday morning, if you'd bought these options before the market tanked, you could have turned about 25 grand into $1 million.
Well, a statistic I saw this morning, out of the last 36 quadruple witchings, 24 have been bullish and 12 have been negative for the market overall.
Yeah.
Does that sound about right to you?
Yeah, it does. Yeah, I mean, look, it's once in a blue moon you do get some really big moves, and it doesn't appear there's going to be one this time, but sometimes they happen when you least expect it, So it's I mean, if you have to concentrate to do these things, you really have to be paying attention, because you can get if you have very good executions on these options, you can really make some pretty good money most of the time on these expirations. As we suggested during the crude, it looks to me like it's poised for upside. And if you remember when we were back down at 42, remember we said this is probably the low, and we see the rally into the first quarter fairly strongly, and it certainly has done that. It's at 56.5 right now, and honestly it's probably going to get to 60 maybe by the end of the month, and it might even get to 70 by the Memorial Day. I wouldn't rule it out.
There's crude on a daily chart.
Yeah, I mean, look, if it's an ABC, if that's the A wave from 44, it got down to, well, on this chart it's 44, but on the chart that we were watching before, I think it got down to about 42. Right. So, you've had a $10 move of the A wave. Call this a kind of an upsloping B wave, right? I call that an upward rotating correction. That's usually a very bullish kind of formation. We had one before, when we were back in July last year, before the big rally. And so this thing, probably could get up to about 65, 70 by the looks of it. I don't think it's going to hit a new high, this time around, but it might later on in the year. It might hit a new high depending on supplies. And of course the Venezuela situation is probably a factor, because we don't know what they're producing at the moment, especially with the power being off for a week.
Is the power still off?
I haven't heard about it, and I think it's probably back on now. But it was definitely off for about 5 days, which is pretty. Listen, it's bad enough that the fire goes up.
Some of Maduro's family got caught trying to sneak into or trying to go to Colombia, and
really?
they turned them back.
Huh.
Venezuela news. What we got?
Yeah, and you've got a pretty good crossover on that indicator of yours there too.
I'm sorry, what's that now?
You've got a pretty good crossover on that indicator of yours.
Oh, down here at the bottom?
Yeah.
Yeah. Looks like it's turning back up.
Yeah, look at the one at the low. I mean, that produced a pretty impressive move. So.
No, yeah, it did. Power has returned to Venezuela after a week after the country was plunged into darkness, but access to uncontaminated water remains critical. Why was the power turned off, or why did it go off?
Oh, they're claiming it was sabotage. So who knows? They could, it's boy, I mean, when the power goes up for a few hours, you feel it here. So 5 days in the heat down there would have been unbelievably hard to endure. So certainly sympathize with everybody, and not having drinking water. I mean, that's just diabolical.
Well, they're starting. It says here, people are so desperate for water they are taking their chances, regardless of whether it might be contaminated or not. You don't know where this water's coming from, if it's treated or not treated. You take water home without knowing the consequences of it in the future.
Yeah, it's just shocking. And you know what? If they'd let all the aid come in, the people would have had water to drink. It's just terrible.
It says here, water shortages are hardly a new problem in Venezuela. Venezuelans have struggled through water shortages under the Maduro administration for a whole host of reasons, including water network malfunctions. Part of the economic crisis that has plagued the once wealthy nation for the last 6 years. Why are they in such a dire situation? Who's responsible for this?
I tell you how, I was actually just going to chip in and sort of, this all started with, it was kind of a socialist initiative, really, and that was that they wanted to subsidize gasoline, and it was the cheapest gasoline in the world. I think it was just a little 7 cents a gallon, something like that. And they were basically losing billions by subsidizing the gasoline for the people, and actually, it was created a market for all these clunkers. Remember when they had the clunkers?
Cash for clunkers, Obama's first.
Yeah, a lot of those ended up down in Venezuela because people didn't care driving heavy, cars that use a lot of gas. And listen, they didn't have necessarily the buying power, so they were glad to buy a car for a few $100 that they can run around in, But and listen, quite a long time ago now, I flew once from Trinidad to Tobago back in the days when gas prices weren't that high. I think it cost $3, like just to fly. It was something incredible. And I think it's the same in Venezuela. That was subsidizing the airlines, and because Trinidad and Tobago are oil producing, or Trinidad's a big oil producer, was sort of self-sufficient in energy, they probably had the same kind of thing going on. But that was the big mistake this went on for years, decades even, and even right up until recently. It was only recently they started increasing the price of gas and quitting the subsidy, but it was too late. They drained all the wealth out of the country, and that's probably one of the biggest reasons why it happened. And look, probably for a long time it worked in terms of maintaining the government, because everybody was living in this freedom kind of mindset, but it ended up devastating the whole thing. I mean, it was incredible how much. I mean, I remember seeing some of the numbers. It was costing them billions and billions of dollars every year. I mean, if they just had regular prices, like everybody else. I mean, the energy company would have been printing a lot of money and making a lot of money and able to sustain, you know, would have been able to support the country's development. You know, and the thing is, and why it's really hurt recently in Mexico, you know, one of the problems in Mexico is they're losing billions through theft of gasoline, or they were before this new guy came into town. And secondly, the economics of Mexican crude, you know, are very very slim margins. And Pemex has been losing a lot of money in the last few years. You know, it used to be carrying the country and was generating a lot of revenues before, but in recently it's become a very you know, I think they've had some pretty big losses.
Is this a pirating thing still going on in Mexico?
It's reduced. It's down. It's probably down. 90% of it is gone. There's still I think they've gone from about 80,000 barrels a day to about 15,000 barrels a day, something like that. 10 to 15,000 barrels a day. Barrels, you know, it's a lot of money.
That's a lot of oil.
Yeah. So they don't have it completely under control yet, but I'm pretty sure they're making a lot of progress. But there's so many schemes, you know, involved in all of that. I mean, it's such a massive scale distribution. You know, there's all kinds of, you know, loopholes, I guess, that people can exploit. You know, right up through management and everything. So it's a very complex issue that's kind of embedded over a long time. And all these people, you know, these cartels and everything have been helping themselves to, you know, make millions of dollars. It's a hard thing to give up when you know, and there's a lot of warfare over it. You know, almost every day there's shootouts and things going on with these guys, and you don't know who's getting paid off. You know, police departments and all kinds of people are, you know, in on the deal. So, but this guy has done an amazing job in reducing it down from where it was. So,
speaking of the cartels, there's a pretty in-depth article today written in the Washington Post about this fentanyl crisis that's you know, sweeping America right behind the opioid crisis, and some of the stuff that they revealed in there. Trying to see, I had the article on my phone. It may have gotten scrolled down. Let me see. I can probably pull it up on my desktop here. But some of the numbers and how this got missed by so many. Washington Post right here. Okay. They tried to get President Obama to do something about it, and no one seemed to really take it seriously. In May of 2016, a group of national health experts issued an urgent plea and a private letter to high-level officials in the Obama administration. Thousands of people were dying from overdoses of fentanyl, the deadliest drug to ever hit U.S. streets, and the administration needed to take immediate action. The epidemic had been escalating for 3 years. The 11 experts pressed the officials to declare fentanyl a national public health emergency that would put a laser-like focus on combating the emerging epidemic and warn the country about the threat. The letter said the fentanyl crisis represents an extraordinary public health challenge and requires an extraordinary public health response. The experts wrote to six Obama administration officials, including the nation's drug czar and the chief of the Centers for Disease Control and Prevention. The administration considered the request, but did not act on it. Now, they did they did allocate $1.1 billion to fight some kind of flu, like the bird flu. I forget the name of it. 2 people ultimately died from that. But what's happened with this fentanyl thing, it's hard to even fathom. Let me just give you a couple of these numbers here real quick if I can pull them up. In 2014, 5,695 people died from fentanyl and other synthetic opioids. And then the way this thing escalated, trying to get to the next. Okay. In 2015, 9,803 people died from it, but still no one's making any noise at the government level to get anything done. Then the next number, in 2016, it jumps to 19,720 people dying from overdoses. And the most recent number that they... this is a really good article. It's on the Washington Post. If anyone just Googles fentanyl news, you'll see the article today from the Washington Post. In 2017, the number jumped to 28,869 people. Because as the DEA clamps down on the oxycodone and the OxyContin and the other stuff that doctors were prescribing here in the U.S. that created the first wave of the opioid epidemic, as they begin to write fewer prescriptions, you know, addicts turn to the street. And so the cartel shipping the heroin up from Mexico, they lace it with this fentanyl, and apparently it's not an exact science for them as a result of all of these overdoses, but it makes the heroin more powerful, they can sell it cheaper, and according to this article in the Washington Post, people were able to buy this stuff direct from China over the internet, and the U.S. Post Office was in no way prepared to catch all of these shipments coming through. So it was just pouring into the country and people just ordering it off the internet. Just log on, buy something. And there's another synthetic opioid out there now. Well, fentanyl is 100 times more powerful than heroin. And there's another synthetic out there that's 100 times more powerful than fentanyl.
I don't know how people can even deal in this stuff.
Can you hold for me just one second, John? I got Dr. Tom on the other line. Hang on. Go ahead and talk.
Yeah, I just don't know how people can get involved in this kind of stuff. It's just terrible.
Hi, Dr. Tom.
And how do you lead a productive life if you do?
Yeah.
I was just reading a book. Aaron Hernandez used to play for the Patriots. I don't know if you remember him.
Where do I find that?
But he was convicted.
Yeah, right.
He killed all those guys, and James Patterson wrote a book about him, and I just read it in the last couple days. And
yeah,
I mean, he was smoking pot his whole life, and I mean, it just kind of ruined him.
Oh yeah. Okay, here we go. Did I just logged myself out? I guess. Okay. All right, 914. 614 3221, and the access code is 207 814 119 pound, and then it says the audio pen is 16 pound.
Okay, I'm going to call right into that, and for some reason you can't hear me. Check with Michael because he'll have the presenter code available somewhere. Sometimes it's different than what's shown there, but since you're an organizer, that's probably the right code. I'm going to try dialing in right now.
Okay, all right, sounds good.
Yeah, and they get.
What do they know? You know?
Yeah, they just, you know, but they don't know. They don't know. They try something, and next thing you know, they're hooked or they're dead. One or the other. It's just terrible.
Yeah, this is really bad. Dr. Tom's going to try to dial in here. He got caught out of his office on another appointment, so he's going to attempt to dial in. We'll see how that works. So John, anything else you want to cover?
No, listen, thanks very much for the invite. I think the gold's trying to pull up a little bit here. I'm not sure how much it's going to rebound, but not you know, if we get another upturn or you know, we got to look. I guess we got to wait till tomorrow to see how the markets behave into this 15th and maybe into Monday. Get a better handle. But I think if you start to see the metals rally into the Fed meeting, that will be a positive sign. You know, that will be kind of encouraging. So we'll have to take it from there. But right now, the market is very quiet after.
Very quiet. Yeah.
Yeah. So that could imply that we're going to have we might have a more volatile day tomorrow or later on this afternoon. We'll just have to see how it plays out. But obviously, the way that it's looking on your chart, you know, if we get above 28.24, 28.20 or so, maybe then we can come up and challenge that major resistance there.
Yeah. Okay.
Yeah.
All right.
Okay. Listen, have a great afternoon, and we'll catch you tomorrow. Thanks.
Talk to you tomorrow. Okay. Bye-bye. Dr. Tom, is that you I heard?
Yeah, can you hear me?
I can hear you.
Okay, great. Sorry about the beeping. That was my car.
Oh, no problem. No worries. Glad you could join us.
Well, I'm glad I could too. I'll be talking to you and driving back to my office at the same time.
Okay. What would you like to talk about today?
Well, I heard y'all talking just now a little bit about gold. What's been on my mind is what happens to gold when stocks move in one direction or another. I actually had a chart I wanted to show that shows that basically over time gold and stocks move counter to one another.
They do. That's true. That's something that we tend to watch as well. Not always the case. Sometimes we see them move together, but most of the time they do have an inverse relationship.
Yeah, so it's basically gold is definitely non-correlated. It's pretty much non-correlated to any of the other asset classes. Some people think of gold as a commodity. I don't. And one of the reasons I think of it's more as a monetary instrument than a commodity is that very often gold moves counter to the commodity index. But when we're just talking about stocks, it's definitely non-correlated there. And sometimes it is, like you said, inversely correlated.
Why is that?
Well, there's certain times, you know, particularly when the economy is doing well, stocks are going up, that people think of stocks as safe. 2008, a lot of people, that was the first time they'd ever seen a real downturn. I've lived through 3 or 4 really big ones. But that was the first time they realized that stocks don't go up every year, and they're not necessarily safe. And so, as you know, I own a gold company. As soon as the stock market started to drop, my phone started ringing off the hook.
I bet it did.
People wanting to pay it. Yeah, flight to safety, they call it.
A flight to quality, flight to safety, right, exactly.
Yeah, some people call the gold index the fear index. I don't really like that personally because the Bible says that God has not given us the spirit of fear, but of power, of love, and a sound mind. So I think of it more as just using that sound mind that God gave you, using your brains. And when you're in a risky asset class and things start to get flaky, you get into a safe asset class. So that's what people have done for years. When there's wars, they flee to gold. When there's economic turmoil, they flee to gold. And I think that's about to happen.
Well, with any
So
company,
the big question is,
with any company that
Go
you
ahead.
buy shares in, say Boeing, for example, you don't know what's going to happen next. You don't know what will come tomorrow. And so the stock can move up, it can move down. One thing about gold is it's gold today, it'll be gold tomorrow, and 100 years from now, it'll still be gold.
and gold has always, actually always kept pace with inflation. You certainly can't say that about the stock market. Stocks and bonds, and all forms of stocks, including mutual funds, REITs, and even gold stocks, suffer from inflation from time to time. But gold itself always keeps up with inflation. So that's another reason why people think of it as safe. I think the big question right now is, why are both gold and stocks going up? And I have a theory.
I'd love to hear it.
Okay. I think the really sophisticated investors know that we have at least a serious correction and quite possibly a crash coming. We had a serious stock market correction last year. I had people call me up saying, "Tom, do you think there's going to be a correction?" I said, "What are you talking about? We're in a big correction." The Dow lost 4,000 points in a short period of time. But then we had the dead cat bounce in January, and it's doing okay now. But if you go back and look at prior crashes, that's the behavior the market's had. You start to see cracks developing, volatility. Last year, we had 3 down days where the Dow was down over 1,000 points, and 2 of those were in 1 month. So those are cracks. When you see a 4,000 point swing like we saw, that's another crack. And just the very fact that the Dow is at the highest point it's ever been, that in itself should put people on alert that at some point, it's like a roller coaster. Have you ever seen a roller coaster that just goes up and up and up and never stops going up?
No.
It has to have something to support it. And so that's the stock market. It's really any market. They eventually correct. Now, stock market overall has gone up. I've got a 100-year chart of the Dow on my wall in my office, and it looks really great, but I always have to remind myself that 2 things are not shown on that chart. One is the effect of inflation, and 2 is the effect of swapping stocks out. As you know, they have this nasty little habit, if the stock's not doing well,
That's right.
pulling it out and replacing it with a performing stock. So although that, go ahead.
No, I was just going to say it makes it a best of breed index. All of the indices, S&P, Dow, Russell, NQ. If a company gets weak, if their stock's not performing, they kick them to the curb and bring in some strong young bull, and off we go again. So over time, that 100-year chart that you look at on the wall of your office, it's basically done one thing since the inception of the markets, and that's go up. Yeah, sure, we've had pullbacks and turn downs and all those kind of things that happen at a healthy market, but because it's programmed to go higher, that's what it's done.
But if you only showed the stocks that were in the Dow from the beginning and never showed the replacements, just kept adjusting it and it becoming fewer and fewer stocks, the performance wouldn't be anywhere in the same neighborhood.
That's right.
Of what it's shown. So anyway, here's my theory. I think that the big people, the smart people, having a lot of money doesn't necessarily mean that you're smart. You might have inherited it.
Right.
But if you made a lot of money in your investing, then to me, you've got a certain degree of smarts. So those people, and I talk to a lot of them every day. I'm blessed to have Christian friends who are millionaires and who are great investors, and I talk ideas with them like you and I talk. And this is what they're doing, is they're gradually getting out of their stocks. They don't want to dump a whole bunch all at once, because they dump the market and then they'd be selling their stocks lower. So they're being smart, and they're getting rid of them gradually. And at the same time, they're starting to increase their positions in gold. But again, if they, some of these guys, literally, I know guys that buy a ton of gold at a time. A ton, 2,000 pounds.
Wow, that's a lot of gold.
It's an unimaginable amount of gold. But they're not doing that. They're buying a little at a time. They're being smart about it, because again, if they bought in huge amounts, then that would push the gold market up, and it would mean the next batch of gold they bought, they pay more for it. So I've seen this happen a dozen times over the years. They're gradually shifting positions, and eventually it'll show in the charts, and you'll see the stock market visibly down, and you see gold really climbing. I think gold's up about 100 points in the last month and a half, right?
Let me bring it back up again. Well, let's see. Hang on. Here we go. Okay, on the daily chart, back in August of last year, we hit a low of 1182, and we put in a recent high at 1349. So 1349 minus 1182, 167.
Okay, and where are we right now?
I showed 1295.70. We sold off hard overnight, lost about $20 an ounce.
I didn't see that. I left the house early today, and for some reason,
the high of this session is 1311, and the low is 1292.50.
Yeah, for some reason, the screen in my car here will only show me like GPS stuff. I can't get any stock chart.
Well, that'll change in the near future.
It's very frustrating, though. So, anyway, I think that's what's happening, and I'm not going to bet the farm on it, because I don't know when it's going to happen, but I do believe that we're going to see stocks, like I said, either not a minor correction. I think it's going to be at least a 20%, but we could see a real crash. And so I'm well prepared for that. I've got a lot of gold, and I won't be sad when the stock market drops, because I don't own a stick of stock.
Really? So you're all in on gold?
Yeah, I mean, I used to own a lot of stocks. I've managed millions and millions of dollars worth of stocks for other people, but also I had a pretty decent portfolio of my own, and both long-term and short-term stuff. Mostly short-term. I've never been a buy and hold kind of person. But currently, in my IRAs and in my personal accounts, I'm totally out of stock, because when I saw the stock market acting like it's acting now, back in 07, I got out of stocks, and I was glad. And I was a little early, actually early 07, I was completely out of stocks. So I could have made some more money. But, the stock market has this nasty habit of going down twice as fast as it went up.
Yep, gravity takes hold, and yeah, it falls. Yeah, you're right, twice as fast as it rallies.
And sometimes more. So I would rather be out early and miss profits, than get out late and take huge losses. And again, that's a biblical principle. You know, in Deuteronomy, I think it is, the Lord tells the landowners, the farmers, not to glean the fields. So when they're picking their corn or whatever, don't try to get every last one. Just go through and get the bulk of it and leave some for the poor people.
That's
and
right.
then after they do their harvest, the poor people come in and they get enough to eat on. Well, I use that principle in my stock trading or in anything trading. You know, don't try to get out of it very high. Don't try to squeeze every single dollar out of it, because more often than not, you're going to regret it. So it's a good principle.
I agree with that. Yep. When you try to milk that last tick, it usually comes back to bite you.
Yeah. You know, just a side issue here, but 40 years ago when I enrolled in the College of Financial Planning, I started reading their textbooks. And I wish it had been today. Everything's online now. But, I mean, they sent me about 50 or 60 pounds of textbooks. And I laughed when I started reading their cherished financial planning principles, because they seemed to think they invented them. But in fact, every one of them came from the Bible.
Really? Do they hold themselves out to be a Christian organization, or is that just the way?
No, it's just that all truth comes from the Bible.
Amen. Yeah.
You know, it's like the laws that men make up, they think they made them, right? You know, thou shalt not kill.
Right. Exactly.
God invented that principle.
Thou shalt not lie when testifying to Congress.
Yes. You shouldn't commit adultery, and so on. So all of our laws, you know, all the good laws, the original laws, are based on the Bible. Now, of course, we've made some really stupid laws more recently, like laws that lead us towards socialism. But all truth comes from God, therefore all good laws come from God, and all good financial planning principles come from God. I mentioned a few weeks ago about in Ecclesiastes where it says that you shouldn't put all your eggs in one basket. Now, that's not the way the King James says it, you know. It says, you know, have your money in 7 or 8 different places, lest some evil befall you. But it's that same principle.
Right.
And by the way, when I was younger, I heard preachers a lot of times misinterpret that. They'd only read like 11:1 and 2, and you know, have your money in different places. Mm-hmm. And they would preach that as, well, you should invest your money with 7 or 8 different ministries. You know, spread your money out. Don't give it all to one place. And it's not talking about giving at all, because if you look at the 10th chapter, it's very clearly all about investments, and it carries on. There's a lot in chapter 11. There's a whole lot in the Proverbs, great financial principles. The parable of the talents. I was brought up to think that talent was the way we think of the word talent. You know, like I play a clarinet, or I know how to draw, you know. But the talent was actually a bag of gold, and depending on which expert you listen to, it was a working man's wages for 20 to 40 years. So it was a pretty substantial amount of money. But it was a bag of gold. And the Bible made it clear that God was displeased with the lack of faith, basically, that the one servant showed by burying his money in the ground. Well, today's equivalent would be putting your money in a CD.
Right.
Because you make about as much return on a CD as money in a coffee can.
As money under a rock.
Back 40.
Mm-hmm.
Yeah. So there's a lot in there. Even the gold standard is in the Bible. You know, Haggai 2:8, the silver is mine and the gold is mine, says the Lord of hosts. Well, I read that a lot of times, and it didn't really hit me. It didn't really make a lot of sense to me, frankly, because why would the Lord say the silver is mine, the gold is mine, when throughout the Bible we know that everything belongs to Him,
Right.
even the sun and the moon and the stars?
Right.
Why did He single those key things out? Why didn't He say the donuts and the asparagus are mine, says the Lord of hosts? You know,
Not because it's important to Him, but He knew how important it would be to us.
Yeah, He was telling us that gold and silver are the basis of a sound financial system. And every country, I've gone back and studied as far as I can go, thousands of years, every country where their money was gold or silver, or where it was backed by gold or silver later on, paper money but backed, has flourished and been blessed. And every country that's gone on a fiat money standard, money backed by nothing, has crashed and burned. Have you read the book, The Lords of Finance?
The Lords of Finance? No,
Yes.
I haven't.
Somebody told me about it, and I got it in an audio book. And I've been listening to it every chance I get. As soon as I get in the car, I turn it on. Fascinating stuff. It's basically talking about central banking and the people that control central banking and how, you know, we think of them as being erudite, almost scientific in their thinking, when very often the decisions they made were emotional. You know, sometimes the people making major decisions were actually suffering from depression, and it's truly amazing how the world has survived financially with some of the craziness that's gone on in the governments and in the central banks of the nations. I think that's why our founding fathers omitted a central bank totally from the Constitution, because they suffered under the evils of central banking, where a small number of lawyers and politicians and bankers control everybody's economic future. You know that the Fed can, just by raising rates a certain amount, put our unemployment rate back up to Obama levels of 10%. Think about it.
What's the mechanics? What's the mechanics that make that work? We have a Fed meeting next week, by the way.
Well, the mechanics are they raise what they call the discount rate. Obviously, the rate at which they loan money to Fed-related banks. Well, if they raise the rate that they charge, then the banks have to charge more to the commercial borrowers, and then the borrowers have to charge more when they manufacture goods to send them out to the retailers. Retailers are paying more, so they charge more. And then it becomes a vicious cycle. Inflation rears its ugly head up. And if they chose to do it, they've been very circumspect about it. They raised rates small amounts last year, announced that they were going to raise rates 4 times this year, and they backed off and said maybe 2 or 3, and now they're even backing off from that, which is all good. But well, let's use a real extreme example. You know that most bankers, and particularly central bankers, are internationalists, right?
Correct.
They're globalists. They're not loyal to the United States. They're global to the so-called, world government, which doesn't really exist. So let's say that the president and Congress decided we need to go to war against whoever. They could actually prevent us from going to war by raising rates up so high that we couldn't afford to pay the soldiers or buy the bullets. I know it sounds ridiculous, but when you take it to the extreme, that's the kind of power the Federal Reserve System has over our economy. They have more power than the President and Congress combined.
Oh yeah, because it affects every person on so many different levels.
Yeah, they can decide whether you can get a mortgage or not,
Right.
whether you get a job or not, whether your business fails or not, just by manipulating the economy. And of course, that's another thing they brought in this book, The Lords of Finance. The original purpose of all central banking was simply just to keep the currency stable. And if they stuck with that, then there wouldn't be so many problems. But now so-called modern central banking has expanded its role to keeping unemployment low. That's not their business. That's the job of the market, right? The central bank was never empowered to do that, but they've taken that power on. And now they've expanded it further to just overseeing the economy in general. Remember, these are private people. These are private bankers. The board of governors, the chairman of the Fed, is appointed by the president, but he's not elected. Even he's not elected. He's appointed. He's a political appointee, and all the rest of them, the governors of the various banks, are elected by other central bankers. So it's a totally private institution, and yet they've got complete control over the economy of the greatest nation on earth. That's why I thought the president was pretty stupid when he started attacking the chairman of the Fed. Because I don't think he realizes how much power, what's his name, Jerome
Powell.
Yeah, Powell. I don't think he realizes how much power Powell has.
Well, when Powell came in, I don't think he recognized the power of his own words, because some of the first statements he made was, we'll raise interest rates and get this thing under control. He made some pretty hawkish remarks, and the market reacted very strongly. And now he's done a complete about-face. He's as dovish now as he was hawkish in the beginning. So he's learned that what he says carries a lot of weight.
You really have to think it through and really write it down and have somebody else look at it before you say it when you're in his position. Do you remember the briefcase indicator?
The briefcase indicator? No.
This is back from Bernanke's days. The Fed watchers used to say you could tell whether Bernanke was going to raise rates or not by the size of his briefcase. If it was a small one, he wasn't going to do anything. If it's a bigger briefcase with lots and lots of stuff in it, it probably meant that he was going to make a move. I don't know how accurate that was, but the point is that people watch, like you said, every single word that they had to say. And sometimes I wish the president would realize that himself when he makes off-the-cuff remarks that sometimes have effects that he didn't want it to have. But that's another subject. That's for the political show, right?
Yeah, right. Okay. Fair enough. I'm looking at this Lords of Finance that you mentioned. I found a PDF version of it available on the internet. So.
Oh, really?
Yeah.
Well, send me a link to that if you would, because there's a lot of quotes in there I'd like to get. I've got an audio form. I'd rather not write them all down.
I'm emailing you a copy right now.
Great, thank you. Yeah, it's the book's been around for a while. Obviously, if it's free in PDF, but it's mostly history, so it doesn't have to be all up to date. I haven't gotten to the end yet, where it's talking about current events. But some of the characters that have been on the world stage have been really fascinating people. I just finished reading the section on war reparations from World War I and all of the machinations that went on behind the scenes. some of the people were wanting to just really punish Germany and wanted to charge $100 billion in reparations, which would be like $100 billion today, you know. And others were saying, well, no, you know, you can't do that. If you slaughter the cow, it can't give you milk, basically is what they were saying. So would you rather have meat today or milk for a long time? And they wanted to punish Germany so bad that it wouldn't have any way to improve its infrastructure, get manufacturing back off the war footing, back to a civilian footing. It wouldn't be able to sell products to make the money to pay the reparations. So I think they eventually got them down to, like, through years of negotiating, have about $7 million. And then Germany paid it off by hyperinflating its money. I always thought that the hyperinflation of Germany was just something that happened out of foolishness or fecklessness. But it turns out the central bankers deliberately hyperinflated the money to lower the reparations debt. So I heard one guy say that they actually ended up paying the equivalent of 17 US dollars. I don't know how accurate that is. It seems kind of extreme, but I think he was just trying to make a point that they lowered it from huge amounts down to fairly small amounts just by devaluing the money. I think when they started doing it, it was 4 marks to the dollar, and within 4 years, it was hundreds of thousands of marks to the dollar. So basically, they paid us off with worthless money.
Well said. Well said.
And that may be what we do. You know, like, sometimes people ask me why I have a mortgage on my house. I mean, I could write a check to pay off the mortgage, but I'm waiting for the dollar to drop where I can pay it off like 10 cents on the dollar, 20 cents on the dollar. You know, to me, that makes a whole lot more sense. I'm only paying 4% interest, and if I could pay it off for a fraction of the mortgage's value, I'd be stupid not to do that. I'd rather have that money invested. So I've gone from early in my career preaching no debt at all, pay all your debt off, including your house, to now I tell people don't have any revolving debt, don't have any adjustable debt, don't take an arm mortgage out, anything like that. But if you've got a fixed mortgage at a reasonable rate, stay with it. You know, pay your mortgage, but don't try to pay it off. Take that money instead, and you can invest and make a lot more than 4%, right?
Right. Yeah, at the interest rates we've seen for the last decade, that's certainly the way to go.
I'm about to pull into my office.
Okay.
So we may have a little second of interruption when I go from the car phone back to my cell phone, but it won't be long.
Okay.
Okay. So give me just a second to get out of the car and get to my computer. Okay, can you hear me?
I can hear you good. I got you.
Okay. Let me walk inside. All right. So where were we?
Talking about Germany?
Oh, yeah, the reparations. Yeah, that's a real interesting part of that book. But what it does more than anything else to me is show, you know, you hear people, sometimes Christians, say, well, I don't like to get involved in politics, but they come to hear me lecture on economics. And I say, well, you can't separate politics from economics.
It's impossible. And it's also true that you can't separate the politics from emotions, from the general mood of the country, from basically what's going on. I mean, if there's a war going on, it's going to affect politics and economics. If there's a general euphoria about the economy, that changes elections, doesn't it? You know, typically a sitting president, if the economy is good, almost always gets reelected. There's not even a question.
Right. Right.
So it's all mixed in together. I'm going to log in here. Sorry about the...
No, that's okay. This is raw radio.
I wanted to apologize to
scripted
you.
Here.
I wouldn't apologize to you. I was talking to your audience.
I see. Okay.
You know, Dwayne knows I was at a doctor's appointment, and it took much longer than it should have because they wanted to take some tests. You know how doctors are. So I ended up not being able to get out of there till about 5 to 1. So I just called it on my phone. Okay, back here, all set up, ready to go. Let me pull up the PowerPoint that I had meant to use. I think we've talked about most of the things that are in it, but let me just check.
Yeah, if you want me to send that, if you want me to send the screen over to you, just let me know.
Well, we're still not on the internet. I don't know what's happened, but
oh, your internet's down at the office.
Well, I was just told it's up, but I can't get into GoToWebinar. Let me try one other thing. Okay, well then, how can I? Oh, I know. I'll go to joinwebinar.com, and can you just give me the webinar number?
I sure can. Can you hear me? Stand by. The webinar ID is 945-886-291. Did you get that? We may have lost Dr. Tom there. Stand by. We'll reconnect here in just a second. Oh, Mike, yeah, but Mike B asked, does Dr. Tom sell silver? I don't believe so. He deals primarily in investment grade gold, or as some would call them, numismatic coins. Gold, to be specific. Now, he believes there's a place for silver in your portfolio, but primarily what his business does is gold coins. right, guys, stand by for just a second. I'm going to see if I can get reconnected with Dr. Tom. Stand by. Okay, Dr. Tom is dialing back in, so we'll just stand by and we'll finish that thought.
This is Dr. Tom.
Hey, Dr. Tom, welcome back.
I don't know what happened. We were just talking, and then all of a sudden, psh, gone.
Gone. Okay, you were finishing up on the Germany's reparations, and feel free to just pick up wherever you left off. I think we might have lost him again. Oh, there you are. Dr. Tom, if you're there, we can't hear you.
Call them up and tell them we're not happy with that.
Okay, now I can hear you. Dr. Tom, for some reason, I can't hear you. Somebody in the audience said they can hear you, but I can't. I haven't changed anything.
Hello?
Hi.
Okay.
Now I
I'm
hear
calling
you.
from my cell phone now.
Okay, I hear you good now.
Okay, sorry about that.
No problem.
All right. Well, I was just trying to make the point that the central bankers, we think of them as being real clinical and almost acting in a scientific way, using established norms and so on, when so much of what they do is emotional. the reparations issue showed that. It was, the anger the French had towards the Germans. They were asking for ridiculously high reparations that would make it impossible for them to pay back the reparations. And then one of the guys in the United States says, you need to milk the cow. You need to get money from them, but you can't do that if you kill the cow and make it in steaks. You get some money now, but then you'll never get paid back. So a lot of their decisions are emotional. They're human, just like we are, and we shouldn't think that they're omniscient and omnipotent and all-knowing, because they sure as heck are not. I'm sorry?
I was agreeing with you. Yeah, they're not all-knowing.
Yeah, exactly. I like to use a stray dog as an example of how money works. If a stray dog in your neighborhood goes to your neighbor's house and he kicks the dog and screams at it and tells it to get away and so on, and then he comes over to your house and you feed him, where's he going to hang around? Where he's treated the best. Well, money's like the stray dog. It goes where it's treated the best. Money has no home, it just goes wherever it's going to have the best relative opportunity. People that like to drink alcohol, they'll say, well, would you like a drink? They say, well, it's only 1 o'clock. And they say, well, it's 5 o'clock somewhere in the world.
Somewhere, right?
Yeah. So there's always a bull market somewhere. Just because you're used to investing in one thing and that's what you're the best at, if that thing stops working for you, for instance, real estate. During Jimmy Carter's hyperinflation, interest rates were huge. I mean,
mortgages,
22%.
I was going to say mortgages hit 18%.
Yeah, and I've made 18 to 20% on CDs. Wow. So why work, right? Just put your money in the bank and let it work for you. That's where it was treated the best. But then later on, the real estate market got hot, and I was making 100% a year, putting 10% down, and the real estate rising 10% a year. So that's equivalent of doubling your money.
Right.
So, like I say, money's always looking for the best relative opportunity, not the best opportunity solely, but relative to the other opportunities that are out there. You may not like the fact that I can only make 8% on the best thing I can find, but if everything else is 2 or 3 or 4%, then that's the best relative opportunity. But it's just a matter of finding it. What we were talking about earlier, as far as the stock market, maybe I'm overly pessimistic, but I think we're living in a period of unprecedented risk. Not just the stock market, but you know how we came within just a nickel of a global debt crisis in 2008. And that's when our national debt was really bad, and the other governments in the world, except the really poor countries that nobody would lend money to, were bad. Well, today it's far worse than it was in 2007. The national debt of the United States and almost all world governments is growing at an alarming pace. So most people, 2008 is just sort of a distant memory. Matter of fact, some people got into the stock market after 2008, and they don't really have a concept of what a real crash could be like.
Oh, that's very true. There's money managers on Wall Street who've never known anything but a bull market.
Now, is that scary?
That should be a little bit frightening.
Because they have a normalcy bias. Their normal is
up.
The market just goes up.
Mm-hmm.
Yeah. Where I've lived through 3 major crashes and a number of minor ones. So I don't have that the rose-tinted glasses thing going on for me. I know what can happen, but you know, like I say, it's a distant memory for a lot of people, but we shouldn't forget so quickly, because we could see another crash much worse. And a lot of the people that I talked to, the smart ones that I've seen be right in the past for 20 or 30 or more years, are saying that what we could see this year or next year could be far worse than what we saw in 2008. 2008 was pretty bad.
It really was, yeah. S&P dropped to 666.
I'm sorry?
I said the S&P dropped to 666.
Huh. Great number, huh?
Yeah, it was very interesting that day. It really was. And then it turned up and never looked back.
I know. It's strange, you know. Frankly, I thought that market would run out of steam by now. But like I say, I thought that back in 2006, 2007. 2006, I was starting to get worried. 2007, early, I got out of the market totally, as I mentioned, and I encouraged all my friends to get out. And by the end of 2007, I was begging my friends to get out. And half of them did, and half of them didn't. And the ones that did lost a lot of money. So, as we talked about earlier, I'd rather be early than late to the party. And, yeah, I leave some money on the table, but so what? I'm not going to lose all my money.
Amen.
Far too many people that were going to retire in 2008 and 2009 are working today as greeters in Walmart.
That's right. That's true. That is a true story.
Yeah. So, that's pretty much what I have today.
Well, Dr. Tom, thank you so much. This is something that we watch, this relationship between gold and stocks. So we'll take this information and carry it with us, and we look forward to talking with you again next Thursday.
Yeah, and next week I will make sure I'm in my office.
Hey, no worries. We know life happens. It happens to us too.
Okay. Well, great. Thanks. God bless you, and God bless everybody in the audience.
God bless you as well. We'll talk to you soon.
Thanks. Bye-bye.
All right. Bye-bye. Okay, good word for the day. Surrender to God. Galatians 2:20 says, I no longer live, but Christ lives in me. John Calvin defined surrender in these words: to have no other will, no other wisdom, and to follow the Lord wherever he leads. To do this, you will have to face your greatest fear. Who will drive your life? It's pretty handy to have Jesus in the passenger seat when we require his service. Lord, I have a health problem and I need your help. Something hard is going on at work and I'd like it to be different. I'm feeling anxious and I want you to give me peace of mind. Feeling sad, need a little hope. Facing death, want to make sure I'm going to heaven. But when it comes to sliding out from behind the wheel and letting Jesus drive, we're not so sure about that because it means we're no longer in control. For example, if he's driving, you are not in charge of your wallet anymore. You can't say, I'll give sometimes when I feel generous, but I reserve the right to keep what I want. Well, if he's driving, now it's Jesus's money. When you let Jesus drive, you're no longer in charge of your ego. You no longer have the right to satisfy every self-centered ambition. Now it's his life. You are not in charge of your mouth anymore. You don't get to gossip, flatter, cajole, condemn, lie, curse, rage, cheat, intimidate, manipulate, exaggerate, or evade anymore. Now it's not your mouth, it's his mouth. So here's the question. Have you invited Jesus along for the ride? Is he your co-pilot, like so many bumper stickers say? Or is he driving? Is he the pilot? The word for you today is surrender everything to God. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any securities. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.